Hey everyone, it's Friday morning, November 22nd, and welcome back to Capital Markets Quickie. I'm your host, Endrit Cela, and let's talk about what exactly was moving the markets yesterday. Before we begin, a quick note. Today's episode is sponsored by AMF Capital Asset Management Frankfurt. For tailored investment solutions and top-quality mutual funds, visit amf-capital.de. So, Thursday was a roller coaster for the markets. The Dow surged over 450 points, up about 1.1%, while the Standard & Poor's 500 gained 0.5%. The Nasdaq? Well, it had a rocky start but managed to scrape out a small gain by the end of the day. All eyes were on Nvidia after its latest earnings report. The company crushed profit expectations again, but hinted at its slowest revenue growth in nearly 2 years. Why? Supply chain hiccups are holding back shipments of its highly anticipated Blackwell chip. But here's the kicker. Demand is expected to outweigh supply well into 2026. Some experts are saying this is just revenue being deferred, not lost. Nvidia's dominance in the AI chip space isn't going anywhere. The stock? Barely moved, up less than 1%. Meanwhile, Alphabet took a hit after the Department of Justice asked a judge to force Google to sell off its Chrome browser. That sent some shockwaves through big tech, and we saw investors shifting toward utilities, industrials, and financials. On the economic front, jobless claims dropped to 213,000 last week, a sign the labor market is still holding strong. But here's the big question. What does this mean for the Federal Reserve? Traders are now putting the odds of the Fed holding rates steady in December at 44%, up from just 28% a week ago. And finally, let's talk crypto. Bitcoin climbed to a new all-time high, just shy of $99,000. This rally comes as SEC Chair Gar Gensler announced he'll step down in January 2025. Crypto enthusiasts are crossing their fingers for a more pro-crypto replacement, and that optimism is fueling the surge. That's your Capital Markets Quickie. Thanks for tuning in, and don't forget to subscribe for your daily dose of market insights. See you tomorrow.